Guys, welcome back. In today's video, we are talking about the AMC and GME heavy buys, the margin call triggers as we see margin tighten requirements, and many more in this video. First, we're taking a look at this. Both GME and AMC buys outweigh sells, makes sense. So when you take a look at this and you understand that there has been a large net inflow of buy orders coming in for AMC and GME, yet when we take a look at the price as of today, we're only up 0.98, but even in the last few weeks, we are actually down. So again, when you take a look in terms of, when we talk about the order flow, we're not talking about in terms of the quantity of value of orders. We're talking about the total value. So there are more dollar buys coming in than there are more dollars being obviously sold off for both AMC and GME, not just in the past few days, but for the past few weeks and past few months. Again, multiple different factors, which obviously shows us that whenever you're taking a look at the inflow, outflow, the OBV and others, we know that there has been more buys and sells. But yet when we take a look at the price, it doesn't reflect that. Now, we understand typically when you get a net buy of a stock, this price is supposed to go up. But when you take a look at for AMC, you understand that that's not the case. And that's because we've seen in the past, a lot of buy orders are obviously rooted into the dark pool. AMC is obviously a victim of naked shorting. And so there's many tactics which is pushing the price down. But precisely understanding that overall net is that there are more buys coming in, it shows us the confidence, it shows us the sentiment for AMC, and that's the important aspect, because by understanding that there are still money coming in for AMC, it means that the shorts are obviously still trapped, because firstly we understand that they are still trying to suppress AMC. It's the fact that we're seeing more inflow yet the price doesn't go up means that the shorts can't afford for the price of AMC to go up. So that's the signs it shows when we see that we have a big inflow and again more than the outflow, but yet the price doesn't go up. And you can also see this. Collateral for AMC short positions is likely to depreciate with current market dump, as so much is in other securities. It may trigger margin calls if AMC suddenly moves north, and why shouldn't it? Moviegoing is one of the few businesses that thrived during a financial downturn. So what we talked about is the collateral in the past. What you will take a look at is in terms of the collaterals that are being taken by the hedge funds obviously increasing. A large amount of that is in securities collaterals like you guys can see here. Now, this is obviously based on multiple different things. You know, we talked about in the past what we have are obviously the stocks that these institutions own. We talked about the commercial real estate and of course others as well. But we've also highlighted in terms of understanding that a lot of the things in which they took collaterals in are all starting to either collapse or fall drastically in value. We talked about the 68% decline in commercial real estate. We obviously are seeing what's happening in the overall stock market. And so this is where we are at. And so as we see the collaterals falling, what we could be looking at is how it trigger margin calls. And also understand during a time of financial downturn, when we take a look at what will happen to AMC, well, when you compare it to what's going to happen with all these institutions who took large collaterals in these firms that will drastically fall during economic downturn, it's obviously AMC will out-triumph all of these firms, out-triumph the institutions, and that's where we will be at. Another thing, and this is obviously talking about the dark pool, AMC's dark pool dominance is unreal. 54.66% of today's volume, a massive 6.4 million shares traded off exchange. That's more than half of all AMC trades happening in the shadows, away from public order books. Meanwhile, NYSE barely got 13%, making it look like a ghost town for retail. So these off exchanges aren't about liquidity or price discovery. They're about hiding true market demand, suppressing price action, and keeping retail in the dark, literally and figuratively. Every time a share in these hidden pools, it dodges the transparency of the lit market. Every time you see a manipulated price, you know why. And so this is what we talked about. The game is rigged, but the heart of cards can't stand forever. And you can understand this in terms of, like we talked about, despite the fact we are seeing more buys than sells coming in for AMC and for GME, we're not seeing the price go up. And that's because of the fact that they are hiding the true market demand. They're suppressing the price action. And so if anything, what we can be seeing is actually the inflow should be even bigger than where they are right now. And that's because we are not able to see the full extent. And so that's what they're doing with obviously suppressing the price action. And remember, they're doing this because they can't afford for the price to go up. If at any point AMC suddenly moves north, we obviously may trigger margin calls. And you can already see how this is a sign of it. So you can see brokerages tightening margin requirements. So this is showing for GME. I'm not sure if it's showing for others as well. So feel free to obviously check and comment down below. But you guys can see margin on this instrument is restricted. And this is something that we have seen multiple times in the past before for both AMC and GME. Like I said, right now we're seeing it for GME. I'm not sure if it's for others, so make sure you do your own due diligence and confirm it and obviously share with others. But this is what we've talked about. It's about understanding how they need to suppress price action. It's about understanding how the collaterals are falling and they can't afford for the price to go up. And that's why the margin is obviously restricted, because at any point when we suddenly see a boost in the price of both AMC and GME, we're obviously going to be seeing the margin requirements suddenly drastically increase for these hedge funds, for these institutions. And that's exactly what they are afraid of. Like I said, we have seen so many signs that are showing how AMC, how GME is posing a massive threat for these shorts, for these institutions. And as of recent, we've seen multiple signs all stacked up at once, showing how the shorts actually don't have the control anymore like they have been, like they have wanted to, because they are unable to continuously, keep everything in check right now as we see these things happening. You can see 63% of all retail stock trades are executed in dark pools and OTC by firms like JP Morgan Chase. JP Morgan received a 348 million slap on the wrist for manipulating markets for a decade with dark pools. And so this is obviously what's ridiculous, because when you take a look at how much JP Morgan makes, especially within a decade, you understand that whilst 348 million sounds like a lot of money, which of course it is, but when you compare with how much money they've made, and this is a point I always try and make, is that it is nothing. And if you have given me the opportunity to be giving up $348 million, but in return, I'm able to make hundreds of billions of dollars, then I'm sure anyone would be willing to take that offer. Now, if you're saying that this is at the cost of scamming normal people, then of course not. But for these banks, they don't care because they have been doing it for the longest amount of time. But that's exactly what we've talked about with how dark pools are obviously stealing our money, how dark pools are hiding what's there for us. When we take a look at some of the technical analysis for AMC, you can see the long-term MACD bullish diversion on AMC is extremely volatile, and it's showing obviously a promising thing. But like we said, I do think that when it comes to AMC, whilst technical analysis is obviously important for others, and it still is relevant for AMC, I do think that the fundamentals are more important. And this isn't just fundamentals about AMC's well-doing. This is fundamentals about the short sellers of AMC, the banks that are prime lenders of the short sellers, the overall market economy, because those are things right now that are actually heavily tied in with how margin calls will happen, how short will stay in the game, or if they are going to get exact margin called, and the MOAs will obviously happen. Furthermore, breaking, Bank of New York Mellon Corp adds 60,000 GME shares, bringing their total position size to 2.5 million shares worth $80.4 million. And institutions keep buying. So we obviously talked about the net inflow. And again, this is a mixture of retail and institutions. But it's about understanding that institutions have continuously bought into AMC and GME. Now ask yourself this. For the people who are saying that that AMC is a bad investment, that GME is a bad investment, why are these institutions buying in? Why have they continuously, and this isn't just about, recent, this is a position that they've continuously added. This is a position that they've bought in the past. We have seen firms who have bought AMC even higher than where it currently is right now and have not sold their position. And so they obviously understand the potential of AMC. They understand that the real value is obviously way higher than where it is right now, and that's why they've bought in. As always, none of this is ever financial advice, so do take advice to so make sure you do your own due diligence and research, and I'll catch you guys next time.